Great people. We're about to get started. Let me spotlight myself for everyone so everybody can see. If you can hear me, drop a comment in the chat. Just want to make sure that everybody can hear me. We should be good to go. A couple things we're going to discuss at the top of class. So two things that perfect. Thank you for that. Just want to make sure audio was good. So two things I want to discuss. So there's obviously been a lot of delays in economic data. Data that we usually would get on certain days hasn't came out. So just unfortunate situation in that regard that there's been a lack of transparency as far as the data coming. And we just, we haven't had the data come out and been able to see it. So there's been a lack of transparency in that regard. So I do want to say that we don't have the unemployment numbers. There's a lot of things that we're missing. And so that has, to me, taken a little bit of effect in the market from the standpoint of we just don't have those accurate and requisite numbers. So the numbers for October, they said it's likely that they won't ever be released. So once again, those aren't my words. Those are words directly from the White House. So I do want to say those are not mine. Those are White House words. So nonetheless, this is what we have. And the purpose of tonight's class is to really go over a few different things. And I want to talk about entries, exits, and I just want to talk about position management as well too. I think those are one of just some of the main things that I want to hit on really, really closely here. So, first we'll start off with this, right? So, anytime you get into a trade, and I actually dropped it. Let me actually share my screen. You should always be monitoring the QQQ and the SPY or the DIA, right? So a lot of times what I realize is, and this is something you had to learn early, right? Either you learn it early or you don't. But a lot of times I feel like we over trade because we're kind of like fishing for a new trade every day. There's some days where, of course, every day there's probably a trade available. Don't get it twisted. Stocks are moving up and down every single day. But I want to talk about the mental exhaustion that you kind of put yourself through, especially when you are just continuing to go back to the well. I will say this that, from an educational standpoint, just for people to actually know and understand, the most money I probably ever lost is when I was over trading. Right. So what do I mean by that? You just keep coming back to the well thinking that, hey, there's a setup and an opportunity, and you put it in your mind, and now you think, okay, well, boom, there you're just forcing things that honestly are probably not there. So I do want to say that it's okay to take a day or two off. I think sometimes we get so much into the grind and we get so used to, and we just think, okay, well, we can just do whatever. We don't gotta, take some time off. But the mental fortitude it takes to perform, especially in a market at a high level, if you're not right from a mental perspective, I think it's better for you to just stay away from this for a second. So I would not be putting a ton of pressure on myself to feel like every single day you got to come in and you got to do the most, right? And I think sometimes we put that pressure on ourselves to feel like, hey, we got to come in and hit home runs. Whole time, it's really just good to get those base hits. That's what I realized more than ever. It's okay to just allow the positions to just come to you and get a hit. You don't need to hit a home run every day. And I think that's where, like I said, we make a lot of the biggest mistakes is trying to hit home runs, right? 24/7. Home runs to me come a dime a dozen. When it happens, it happens. But don't be the person that's kind of just trying to force things that may or may not be. Also, anytime you take a trade, you should be looking at the indice. So you should never come to your stock chart. I was looking at Wolf earlier. A second. Why did this? Let's see. Let it load up. There we go. One second. There we go. All right. So at any point in time, you should always have, depending on what ticker you're trading. So for example, if I'm trading Oracle, right? Like we took an Oracle position today. Two things. There we go. Oracle. There we go. All right. So if I see, here's what we call, if I see Oracle is getting ready, let me move myself out the way, hide myself. Perfect. A lot of times we'll come back to the same level individually on the QQQ. Hence, this is what we did yesterday and as well today. So we came back to the same area here on the Qs and then price bounce. So at the same time with Oracle, we didn't break below that support level today. Had the QQQ broken down, Oracle more than likely would have broke down. So what it's always good to do is if you see the QQQ is heading, let's say you're short and you bought some puts on a company in a ticker and you're watching and you say, okay, well, I want to look to actually go ahead and close out. I think it's good to close out at supports, right? Like very, very smart of you to close out at a support. You should not, and I repeat, you should not be waiting until the market reverses to close out your position. Close it out ahead of time, right? So it's okay to take profit, right? Get out of the position before, right, you see, right, that particular equity break down if it's the QQQ is not breaking down. So if I see the QQQ is refusing to break and I have a level drawn at 618, I'm short on Oracle. So like the trade that we took today, well, we took yesterday, but we closed out today. I'm like, okay, this stock is not getting below this level. So what we need to do is it'd be best for us to get out of the position right now. Right. So that is why I said that here on Oracle to just kind of add more context. If I'm seeing that the QQQ is not actually getting below that specific level, that gives me an idea to say, all right, well, we could reverse here and we don't want to get caught in the downside action of our contracts moving against us. Right. So I'd rather take a small profit versus even trying to hit a home if the home run, like I said, is not even there in the first place. So every trade is not going to look the same. So in this example, right, I'm noticing that, like I said, right, this move here on the downside action, right here on Oracle, we was trying to get below 225, but is it over yet? Well, no. The stop price made a lower low after proceeding to make a lower high, right? So we came up here, we dropped, made a lower high, and then dropped today and made a lower low. So if we're not getting below this 225, let's talk levels, right? Well, now Oracle, we are looking at here at this weekly time frame and as well as daily. So we're waiting on Oracle to see a clear close below 225. Where do we believe, based upon our chart, Oracle is going to go to next if it can get underneath that level? Well, we believe that Oracle has a chance to come down here to 216, right? And we're watching and paying attention to that 216 and saying, okay, 216.69. So we're expecting a $9 move to the downside. Some of the main questions that I'm always getting, right? And since I'm always getting the same questions, that means that there needs to be some reinforcement. So I know people ask me, similar questions so I can get the best answers to them, right? So these were some good questions that were asked of me. So I think I owe it to people to be able to kind of deliver really the best answers that I can, right? And the main question that was asked to me was, okay, well, now when it comes time for your entry or vice versa, your exit, time frames. And this is what I always tell people, right? Like if you're a day trader, you're going to be on these micro level time frames. Day traders sit on hour and less time frames. Swing traders were on 4 hours and higher. So if you're looking at the intraday time frames, 30-minute, right? These time frames are going to change relatively a lot faster. Now I can slice and dice and do all of that good stuff here on these time frames, right? So same thing that I could do structure wise here. On a smaller time frame, it's a 30-minute. What happened? Price broke this structure here at 236, and that's why we seen this move down. Now we also have a 30-minute bear flag pattern. So inside this, we understand this is a micro level time frame. So this is is this macro or micro? It's micro. So it's a small time frame. This is not a big time frame. This is a small time frame. So we understand that. Right. So looking here, it's your job, in my opinion, right? To now, as you see that playing out here, two things that you should be willing to go ahead and do. Well, at this time, right here on this particular equity, when I do look at this name, a couple of notes and things that I would say is looking here, we probably should be paying attention and watching, right? Oracle at this 225 level. Because as we get below 225, right? The next level, all I have to do is auto fit my data to screen. I take that off. TradingView is very simple to use, but it's 216.69. So I have a bear flag here on a 30-minute time frame. So where would my re-entry be? Now my re-entry would be right here at 225.01. Right, 225.01. Now I had a question that was asked of me today. I see we got 214 people on. So let me just do this. I know some people are new in the house. We got some first timers in here. I thought this would be good to kind of do to show a little something. Right here, I had someone ask me a question today. There's a whole technical tab here. And listen, this isn't a call. This ain't to call nobody out. But guys, we have a beginner technical section right here underneath information and resources. I can see, by the way, everyone who's watching the Zooms. So I'm going to give a shout out to the top 5 people that are watching the Zooms. Majority of them are here tonight. I'm going to start just giving people their flowers because I know I always try to, right? But you got to be serious about it, right? And if you've been in the community and you ain't come to this tab about technicals, it's nothing I could really tell you. You know what I'm saying? As far as understanding charts, this is right here going to be your foundational point right there. So I just got to stress that. Now, going here to this bear flag pattern right here, right? So this bear flag pattern, at this point in time, we are looking at Oracle to come down $9. So we already put that in our mind now. We already had that set in our mind that this bear flag pattern could play out relatively quickly. Now, what's also, I think, super, super duper important for me to go ahead and just stress to people is this, right? So now you're looking at this bear flag pattern and saying, okay, well, what should be my entry, which is 225.01. So what should I be waiting for? You could get in position, not right now, but let's say the stop price tomorrow morning is at the same area. If you have confidence that price will come and get below this level at 225. So you could decide and say, hey, you can get into this position right here, right now, as we are getting below this area. You could decide and say, hey, I'm going to wait. And I'm just going to wait until we can actually break down first before getting in. Your prerogative. But if you see a setup and you have confidence, there's nothing wrong with taking it early. Now, when we stress as far as buying time, right? And what I really say to people all the time is it's easy to really, and I want to illustrate that tonight. It's really easy once let me use my whiteboard real quick. New whiteboard so everyone can follow me along. Go to the whiteboard. The whiteboard is loading up. So follow me here. When it comes to choosing, and I'm just getting a lot of the great questions that are being asked. So let's just go ahead and get those out the way. So it already should be in your mind. Push come to shove, you know the situation and the setup now. What should you be doing? Well, Oracle, right now, what I want you to do is I want you to go ahead and put in, right, that 230 to 240 strike. This is going to be your strike. Your expiration date, you're already thinking, hey, we're going to do February or March based upon the days until Expo, right? So you already know this up front. And then now you also have your target of 216.99. So the trade is already, now it comes down to the question, are you going to buy 1, 2, 3? That's the questions that you probably are going to have for yourself is how many contracts are you going to buy? But you're always going to look to go, and this is just a good hack, is ideally if you can go in between 1 to 3 strikes within the money, ITM, right? In the money. That is going to be your go-to, right? So that is going to, you have to follow to see the whiteboard. We got 217 people, so you're going to have to follow. Everybody should be. I have 178 people that are following. All of them should see it. So you do have to follow. Everybody else can see the whiteboard. Yep. So you do have to follow me to the whiteboard and click that. So you do have to make sure you follow. So, yep. So 1 to 3 strikes within the money, right? And this is Oracle, right? 230 to 240 strike. So before you even really think, right, I definitely want to say, like, you have to really already know what the setup is. You've done the work, right? You've done the work now. So now it's going to make sure, to me, now you want to go ahead and have and set yourself up for success. I think it's going to be very easy for you to do that following these steps. So you should already know now, I'm getting that 230, 240 strike. The question is, are you getting 1, 2, 3 contracts? That's the main one. February, March expiration. Days until expo. Obviously, you focus on that, your contract expiration. 1 to 3 strikes within the money. All right. So that's what you're looking for to be able to get access, right? Get access into the position. So is there any questions as far as that? When it comes to choosing strike price, because this is always like the main thing that I get asked. And it's to me, once you understand in the options, it's pretty simple and easy. It's not really hard to say, okay, well, if the stop price is here, I'm going to go a few strikes within the money, and that's how I'm going to get into the position, etc. So does everybody understand every trade that you take should have a target? Every trade that you take should have a target. So when we come out each and every single week and we say, okay, well, these are our target levels for these stocks, whether it was JPM 320, whether it was we were looking for payload PANW to break over, right? We were looking for it to break over 218 to go hit 223, right? You always have a target. This was the target for JPM, right? So you just have these different targets, each position. As far as we saw Oracle today, it hit first target, but as well, if you paid attention to Oracle today, Oracle did not break down because QQ didn't break down. So as the Qs stayed above 16, what did we do? As the Qs were approaching their low of the day, we did not go ahead and stay into the position because we said, well, okay, the market can reverse back upwards. So let's go ahead and just take our profits and take our bag. That's what we did, right? So instead of us just sitting around twiddling our thumbs, we wanted to be more proactive instead of reactive, right? So more proactive instead of reactive was our MO. And that's exactly what we wanted to do, was to be more reactive, right? I was going to be more proactive and not reactive. So once we saw that stock did not break that level, we said, all right, cool. We're going to roll out of here, close the position, move on. That was our MO on the stock. When JPM hit 320 today, did we care that JPM was going to sit here and run any further? No, we didn't care. Even if it went up another dollar or two, what was our target to begin with? So I think it's like I said, it's good to stick to your targets. I think there's always going to be another case where you can say, well, I could have made more money. That's a mental battle that I feel like us as people, we always go through. Oh, I could have made more money. I could have made more money. Should have made more money. It should have stayed there. What you got out of the position is what you got out of the position. So don't continue to beat yourself up mentally. And then because what happens is you try to force a position that isn't there. Right. So I do want to stress that. Don't force positions that aren't there just because you're fishing for a trade. I think sometimes we're fishing for trades when we should just be sitting back and saying, all right, we'll just wait on that next alert. Now I want to speak to that. Making sure that you have your alerts set up. Like the tools are available for you. You got your Yahoo Finance account, which you can use pretty much at your own leisure and your own will. So you can always use Yahoo Finance to your benefit, right? And I want to say this as we have 200 people that are in the building. Use your tools. I find it that a lot of times people are not using their Yahoo Finances. It tells you directly when a stock price is hitting a specific level. So if you're in a trade and you know, hey, like I said, we're using PANW. We'll use Oracle, right? So Oracle tomorrow, right? We're going to set this example up here. 1 second. So ticker Oracle breaks, right? Because here's what happens. It breaks 225, but then you come back and then Oracle's at 218. And then you ask me and say, hey, is it too late? That's what a lot of times people ask me. Is it too late? The answer to that question is if we're $2 away, if the target is 216.99 and it's at 218, are you really going to fight about $1 right here, right now? So the answer to the question is yes. It's too late. It's over with. Right? You know, I definitely got to tell people, man, 216.99, if his stock is at 218, well, how could you avoid this? By having your alert. So you know what happens is sometimes people are coming back and saying, oh man, the stock is already down, but you missed the move. And now you're like, okay, I'm trying to fish to get in. I'm fishing to get in. You missed the bulk of the move, but you're trying to get into the position already after the alert went off. So you missed your. Now, what a smart person would do is say, all right, I'm going to just leave this thing alone. Boom. I ended up missing, pretty much, the trade, and cool. I'll catch the next one. The other person is going to come in, and now Oracle is sitting here at a support. So Oracle's sitting at a support, and you're trying to force your way into the position. So I definitely want to stress to stay away from that. Now let's talk watch list real quick, because here's are some of the questions that I've gotten from people as far as watch list wise. So I won't say all I can speak to, but a few things that I could speak to is this is where another piece of having your direct Yahoo Finance set up. Now I do have a beginner's watch list that pretty much I'm gonna drop in the chat. Hold on 1 second. Let's see real quick. 1 second. Let's see if I can send it over. All right. So I do have a beginner's watch list that I did develop. So you can use this at your own time and your own leisure. This gives you a good start. But I think any ticker that you're trading, let me go ahead and stop this screen share real quick. Any tickers that you're trading should always be on your watch list at all times, and you should have alerts, especially if you're trading the ticker. So I just dropped it in the chat. I'll post it up a few different places as well too, but just for right now to show. But this is my beginner's watch list. This gives you enough tickers, ETF wise, stocks wise, to be able to use for yourself, right? So this just gives you a few. This is like, just to kind of have a beginner. If I was a beginner again and I wanted a list of just enough, you don't need every ticker, right? Because I got a long list of tickers, and you're not trading every ticker either. Keep that in mind. But there may be some that you're interested in long-term investing versus trading. So I think that's good to differentiate of saying, hey, what tickers would I really prefer to maybe just invest in versus trading? Because not every ticker is always going to be volatile. So you got that. Next thing, let's go back to the indices real quick. Now let's talk. We talked here on Oracle, right? But I want to talk about the DIA, right? The DIA index. I want you guys to look up the Dow Jones Industrial Average. So when we see, now notice the Dow did exactly what we anticipated the Dow to do today throughout this week. Now, we held here on this diagonal trend line. So this was actually really solid here for the DIA, right? Like this has been a really good move. We've seen some good movements here on the up and upside. So price looking really solid here. And we do see looking here at the DIA a break over 483. So we have the Dow Jones Industrial Average with a new all-time high, and we broke out of a falling wedge. But let me show you something. This is how the stocks within a lot of stocks perform the same way overall, right? That their indice is performing. So two things that I want to showcase real quick here. That is incomplete real quick. So notice as JPM broke out, so did the DIA. So perfect here. We have saw myself down. Look at this setup. You can't make it up. Right here was that. There we go. Right. So JPM was pretty much in this sideways channel, making a falling wedge pattern, and then finally broke out. And then, of course, what did the Dow do? Same thing, broke out. So the DIA broke out of this falling wedge pattern. And now we have JPM, which made a new all-time high. And then as well, you see not just JPM making a new all-time high, but the DIA, Dow Jones Industrial Average Index as well. So both the indice and as well the individual stock relatively look the same, right? So what I noticed early on is I was caught sometimes maybe trading stocks that weren't high asset allocation when you should have been. And that's why I think JPM is a lot easier to trade than some other tickers as well. Because if your asset is maybe not as high asset allocation in the SPY and the QQQ, it can drop. But at the same time, when it's dropping, the overall markets can still stay green. So let me show you exactly here. So you see that correlation there. Next thing, we're going to talk about two stocks that both IPO relatively within the same year, around similar times. Circle and CoreWeave. Funny enough, both stocks are around 85, 86 bucks. But let's talk about how both names here right now are showing relatively the same type setup. Now, CoreWeave is right here about to go into a distribution phase. So a lot of times what I realized in the beginning, people don't understand what a distribution phase is. They don't understand market phases at all. You don't understand public participation. You don't understand accumulation. You don't understand distribution, right? So looking here now, when you are following on this particular stock or any equity, you always should be able to analyze what market phase is this in. So in this example, right, we do have CoreWeave, which is actually here about to break into what we call a distribution phase. So a lot of times people only focus on, right, pricing and not actually what's happening here technically. So if this stock is the break below 85, it is now entering the distribution phase. It's made nothing but lower lows and lower highs. What's the makeup of a chart? Lower lows and lower highs. CoreWeave is entering a distribution phase. So now the likelihood of this stock going to 50 has just increased tremendously. Also with Circle Internet Group, another name, the likelihood of this name coming down back to its original IPO price has increased tremendously as well. So the stock is broken down. Both stock charts are broken. Particularly CoreWeave is in a distribution, and as well, Circle Internet Group is here as well too in a distribution phase. So these equities are both pulling down and they're relatively moving at the same pace together. Why is that? What I noticed early on is that we always have stocks that move in sympathy of each other. And we call those sympathy moves, right? So here, this is what we call a sympathy move. So because CoreWeave and Circle Internet Group, they came in around the same time. CoreWeave came in a little bit, even though they may be not in exactly the same spot or same exact space to the T. Relatively, they're both IPOs that are high valuation businesses. CoreWeave and Circle Internet Group are still figuring out both how to become profitable on a consistent basis. So CoreWeave is losing value at a fast pace. Now, this is the time that you should begin to buy when an equity goes on a drop and it enters the distribution phase once it finds a bottom. A lot of our favorite tickers today right? Once upon a time, you had Palantir here, which Palantir at one point in time faced, a similar fate. Not exactly, but it faced a similar fate. You remember when Palantir dropped from $40 to $5 relatively quickly? That ended up being a great buy. Now, I'm not saying either one of these go to be what Palantir is, but it's important to know what phase you're buying an investment in. And so some of the notes that I wanted to make tonight is we're here, it's November 12th today. So you got about a month and a half left of this year. What I want you to start doing is understanding what we call the DNA, right? I think that's so important is you knowing what the DNA, right? DNA, I want you to put that in there, DNA in the chat. You got to understand and identify what stocks you're actually vested into. I think a lot of times people only look at things from a one-sided picture and they don't look at things from a totality perspective. You have to understand the DNA of your investments. So is this an investment that's proven itself? Is it profitable? How many outstanding shares does it have? Is it a low float, a high float? These are things you want to know about stocks that you have your money into. Now, with Palantir, what phase is it in? It's in the public participation phase. So that's why Palantir continues to shoot upwards. Circle Internet Group is in the distribution. Now, there's a lot of stocks that hit distribution, once again, go back into what we call accumulation. So everyone wants to hype the train here, but when the stock is trading sideways for a few years, like it did here, right? You had Palantir, which traded sideways for a few years. And I appreciate everybody being on the Zoom tonight on this pop-up live class, just trying to add value as much as possible, right? So now you have a stock that has ran this much at a very, very, very fast pace. So I just need you guys to know the things here, right? It is once again very, 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 very important, right? Hold on one second. All right. So market phases. Once again, public participation. A lot of stocks are showing you this, even NVIDIA. Now notice SoftBank, they sold their stake in NVIDIA. Doesn't mean anything as of right now, but know what phase that NVIDIA is in. This is where all the hype is, of course. So you got to deliver. One thing that I'm aware loud and proud, and I keep telling people every class, FY 2026. Please pay attention to your tickers. They need to deliver. Companies cannot afford misses. You have 400 companies beat their earnings. So 400 companies beat their earnings in the S&P 500. I want to say it was around 430 to almost 450. I don't have the exact number in front of myself. It could be 454, right? Out of the 500 companies that are in there. So relatively, there's no room for error in 2026. I'm going to tell you guys that now. No room for error. So Circle, CoreWeave, these names, they'll be back and running. There's a name that's back and running that faced the same fate that Circle and CoreWeave did. And this is just a recipe and just to teach people. When stocks IPO, let them find their values. Don't chase them off rip. Because 9 times out of 10, you're going to get an opportunity for the stock price to come down. Remember, once upon a time, Uber was $20. Remember, once upon a time, Snowflake was $120, $130. Just giving those two examples is just showing you like, okay, like stocks will usually come back around to give you a pretty much a good price to be able to gain access into it. So then don't get caught in overpay, right? A lot of times I feel as if we get caught in trying to overpay for these investments, and it's okay. Let it pan out. We don't have to force our hand here, right? So we do not have to force our hand. But those are the things that I wanted to stress. Some of the questions that I get, like I said, a lot of times, and just making sure that we're clear in that regard. So that was the purpose of me covering this tonight. So it is almost 6 o'clock. This is a pop-up. So I'm going to take questions you have for me. And definitely let's make sure I'll get a couple of these ticker questions. But let's make sure I see Netflix. Do you see it coming down after the split? So yes, good question here. Something we actually went over this week, but let me 1 second. Let me actually pull it up on this side because this side is not charted. Netflix best price is about I think I said Netflix right there. Hold on. $67. In between 58 and $67 is going to be your best price for Netflix. Now, do I think you get that? I don't know. As of today, Netflix broke out of this bear flag to the upside. So that was good for Netflix because it was actually going to crack down if it got below 1082. But I mean, a sweet spot for Netflix would be that 826. So you wouldn't want to watch it definitely there. But yeah, those are my thoughts on Netflix. They are going to split. So to me, they very well could give you a little bit of movement to the downside. But yeah, Netflix is not one that stays down for too long. Do you think PLTR and NVIDIA will recover from this sell-off? I think NVIDIA can before PLTR. Palantir, it was funny thing was Palantir is really still at a high. It only briefly went to 200. So, I mean, to me, I don't look at Palantir as a bad thing as far as where it's at from a price perspective. Nvidia, same thing, right? Like Nvidia definitely is, you know, to me, really, of course, we know what stock and company this name has become, and it's a $5 trillion business. But yeah, I mean, I wouldn't look at it like we still really didn't see too much of a sell-off on either one of those tickers. So yeah. NBIL. How do you feel about so yeah, let's make sure that we have some question strategy base. So when you do take a look at NEBIS daily ETF, NBIS, I haven't looked at this one too much, so I can't really call it right now. And it looks like it came in at the right time. NEBIS from an individual, I would not touch Yandex's 2X. Well, I keep calling it. Well, it wasn't Yandex. I would not touch NEBIS's group ticker, 2X lever ticker. Like I would not touch this until probably about $5 to $6. Because I'm thinking just off the strength, like I would not touch NEBIS until it got back to $40, $40-$50 where I would take a crack at the name. So those are my thoughts with its 2X lever. I didn't even know they had a 2X levered ETF. So that just lets you know. NVOX, we're going to make this simple, guys. This is the time to buy NVOX. Forget about it. Set your alerts for $6 to $10, and we'll see you there. That's the easiest thing I could tell you. All right? Easiest thing I could tell you. Yeah. How do you manage a healthy relationship with investing and trading while avoiding it becoming excessive? Don't sit at the screens all day. I think in the beginning, you could very easily find yourself sitting at the screen 24/7. It's okay to go do something else. You didn't get into this to be sitting at the screens all day. So keep that into perspective and reality. So that's my thoughts on it. Yep. CR. All right, let's make sure we get some other things than tickers, guys. Let's get some questions. Good question from Jason. Let me get this ticker right. CoreWeave daily ETF, yeah. I mean, based upon what I'm saying with CoreWeave, I wouldn't touch CRWV's ETF, same thing, for another 50%. So I probably would say around $2. Because CoreWeave, I wouldn't touch that at least for another $30-$40 here. So around 50 is where I'm considering, okay, cool. Right? Just because of the current environment. So I would say that CRWG, probably around $2. Yeah. So we'll get last ticker we'll get is Roblox. No more tickers. Strategy-based questions, please. Roblox. So yeah, Roblox, as far as sitting here right now at 103, Roblox ain't coming back right now. I'll tell you that much. At $100 is going to be the floor as of right now. Back over 108, and you can see a move back to 115. As far as Roblox long-term, decent price, but it's not a great price. I'll say that from where it sits at. This is not a great price. Yeah. If I ever wanted to get into a trade early, if I just had supreme confidence that that trade, you know, it was something I couldn't pass up. Usually the only times I ever really get into a trade before that 15-minute grace period is if it's a earnings reversal type trade. That's really the only time I'm going to be willing to jump into that. Yeah. What's a good strategy when in a trade and it goes sideways? Great question. So two things that you could do. I mean, one, depending on how this is why for one, as far as the timing wise, we always try to, we try to get, especially when first purchasing a position, 30 to 60 days. Those are our in the money options. That's ITM, good rule of thumb. But that's what you buy when you put time on it. That's what you buy the time for. You buy the time because you know that it won't be an everyday thing. The stock price goes up, right? So I do think that is super, super, super important. Do you think TSM is coming back to 286? Do we break or bounce? Get that ticker. Right now we're at 290 on TSM. Try to get above 296. It just wasn't able to do so. It failed. You got a 307 move. So I would watch it at 307 over that 296. But it's very top heavy right now. So if we do get below 286, I think we come right back down. But there's no clear setup when I look at TSM to just say, hey, we're going to go and break over 311. So those are my thoughts on it. Right here. Those are my thoughts on it. And then when you had the indices, which are trading sideways, like a day like today, the volume was pretty much low. You didn't really have much move. It was a chop fest, right? So how can you tell PLTR came back and you believe NVO is coming back? What I just said was really Roblox as far as I don't believe Roblox is going to come back. It's not coming back to 120 or 130 no time soon right now. It's gonna take getting over 108. So when people ask me why do I believe in NVO, NVO is purely, I'm not gonna say it's only just tech fundamentals, but you gotta be looking at, okay, now this is a stock that's undervalued. So that's why I'm willing to give it a shot. You guys see what's happening with Eli Lilly and Company. You've seen what UNH has done in this short little stint. So Eli Lilly is now $1,000 company. Just here in August, it was 630. So you want to buy when there's a discount in the street, right? So we don't want to just be focused on stocks when, they're at all-time highs and everyone's talking about them. You want to try to find a discount. So when you ask me as far as PLTR came back and you believe PLTR hasn't even dropped. Like I gotta be honest tonight. Sometimes like day-to-day moves, I'm gonna tell people where they're going wrong. You're watching the stock too much day to day. And I was just saying this to somebody. Some people's thesis on things are changing by the day when that should never happen. Your thesis should not change from one day. That's like when people even ask me about NVO. I've been covering NVO at a high volume rate for the past 4 to 6 months, but we still have questions on NVO. What that tells me is people are expecting my tone to change from what the original tone was. I never said NVO was going to take off tomorrow. What I did say is that in the long run, this will be a great opportunity to pick up a quality company at a great price. It's hard for us to predict exactly when a stock is going to run. Hence, if you notice UNH, it just hit a level and it's never been back there. Eli Lilly hit a level and it ain't been back there. So the piece of what I want to say is that when good companies hit great levels, they usually bounce and don't come back there ever or for a long period of time. So you do have to factor that in. So that's my thoughts on that. Yeah. I've seen it where And you see what I'm saying? I didn't even see Eli Lilly creep up to 1K. That's the point that I want to make. These are the things that a lot of times people miss because, once again, it doesn't take long for a stock like that to get on a run. And then next thing you know, boom, here we are. I've seen it where low volume can move a ticker, drop it below a macro level. Does that invalidate the trade, or do you still wait for a pullback since it was on low volume? I mean, if it's on low or high, it just tells you, were buyers or sellers, serious about it or not. If it's on high volume, which Eli Lilly's been on high, you could take the move a lot more seriously. If it's on low volume, then you can understand that, hey, it's a lot less. So that's just simply giving an answer. Exactly. Everything not meant to take off tomorrow. And I just definitely want people to understand, like, everything you get into is going to jump the next day. That's not what long-term investing is, and that's not what swing trading is. That's just not what it is. How do you see the intraday volume other than using Bar Heights, TradingView, overall day volume on Yahoo Finance? So those are the tools that we use right there. Those are tools, all the tools that I use as far as seeing volume. Now, you do have different opportunities to use certain platforms for flow. You get to see different alerts. You have things like Flow Algo, right? So you can use Flow Algo as well. It's a good platform to use. So sometimes if I see something, do you think AMD will come back and fill the gaps from it jumping up? Knowing AMD and who it is, yeah, it will. Maybe at some point. AMD's popping off of all this speculation. That's one thing that I want you to pay attention to. Stocks are not popping because of numbers actually being solidified. Stocks are popping off of deals. Oh, we got a deal here, OpenAI deal, or we're increasing our targets, so then the stock pops 10%. Like I said before, 2026 and 2027 is to be about show me what you actually are doing. That's what it's about. All this popping off of potential, that's done and over with. So I want to warn people of that right now. Get ready for that to start ending, because these stocks are trading at premiums now, not discounts. Premiums, not discounts. So there's no room for error for a lot of these names. No room for error. If they start missing and they don't deliver on what they originally said they was going to deliver on, these stocks will get crushed. And if there was a really good example, right, it's 2021 and 2022. George asked a good question. I have felt victim to this, so I'd like to hear your perspective. I think it's about knowing yourself, knowing what your risk tolerance is. Everyone has a different risk tolerance. I can give a suggestion on what stop loss, but everyone has a different risk tolerance. So those are my thoughts on that. As far as, there's going to be times where you're just wrong on a trade, and that trade will reverse down over time. But I think it's comfortable being okay with being wrong too. You know what I mean? I think that's another piece of it is being like, for example, Oracle. Yes, this morning. If I bought time on a contract till March and day one it goes against me, I'm not going to bug out about it, because I'm gonna just say this, right? And there was points in times where we were talking about CoreWeave and Circle Internet Group. I got a lot of text messages today from people talking about those two stocks. This is why I say, when it comes to time, now, did Circle and CoreWeave drop every day? No. But you see where they're at today. You have to also look at the macro part of things. And I think, once again, some people are thinking you get in a trade, you're supposed to be green every day. That's not realistic. Not realistic. If you bought leaps on quantum play, you don't like long-term anymore. You're down significantly. When it comes to quantum, they don't have no revenue or no real earnings. So those tickers are only up off of hype and speculation. So quantum, it will get slaughtered. I'm going to say that again here. The time to buy Quantum is when all of those stocks drop 50% or more. The time is not now. When your ticker is in everyone's mouth, I cannot say that is when it's in everyone's mouth and they start saying, you hear the word, you hear this phrase, this is the future. Sell. Sell. When you hear this is the future, sell. Take your money. Take your money. When you hear this is the future, take your money. Not because it's not. It's at that time, they're selling you smoke and they're going to be ready to cash out. When stocks don't have requisite earnings, it ends up catching up to them. Maybe not instantaneously, but in the long run, it catches up to them. So I want to make sure that you guys know that, right? Like, do not put yourself in a position where you're, to me, over leveraging yourself. And with quantum, it's cool because it's a buzzword. Quantum computing. And these are cheap tickers, easy to get access into, but they have no real value or no real substance right now for you. So that would be what I would say when it comes to, when it comes to everything. So those are my thoughts. Questions. We had enough tickers, so I'm done with tickers, guys, please. Questions. This is the future. Peloton was a perfect example. Stock popping during COVID, and now it's crushed. Because something can have a run. That's one thing I'll say here in the market. Something can have a run, but is it able to be sustainable? That's the main question. Is that run sustainable? Usually, more than likely, the run is not sustainable. So anything can run for a short period of time. The question is, once those earnings start coming out, are you going to be able to be consistent earnings wise? That's always going to be that main thing. So excluding the issue in the IPO, its phases. Can you expand on the DNA without the standard fundamental information? How do you determine if it's good, if it's a good buy during the accumulation phase? So it's all fundamental. So you have to be able to evaluate and say, okay, is this a company that, one, if it's not profitable, do I believe it has the chance to be profitable based upon estimates and what you know the company to actually be? Second thing, usually when stocks initially IPO, they're not going to be in an accumulation phase. They're going to be heading straight into the public participation phase because now the public has access to it. So usually stocks that are in new IPO territory, they're just coming in hot, ready to go right into public participation phase. And then I could use a name like Snowflake, like a lot of the names that we see sitting within the accumulation phase, even Alibaba, right? So if you think about it, when Alibaba dropped, earnings were declining, right? Aren't there have large cap companies in quantum anyway? Correct. IBM just announced. So who I trust more? I trust IBM, a company that's been around 100 years, or these other fly-by-night companies that just say we're going to do quantum, and they just put a nice little cute quantum behind their name, or they add a nice Q in front of their name. I trust IBM more to get the job done. So that'll be what I'll say. Fundamentally, with a company that has a lot of blanks and they don't have any earnings, you just have to understand that those stocks, when the market sours and people become fearful, those are always the first tickers to go. IBM is the last ticker to go. Procter and Gamble is the last ticker to go. Goldman Sachs and JPM are the last tickers to go. The first tickers to go are your companies that have no real profitability and no real earnings. Every time, notice when the NASDAQ drops 2% in a day, notice and pay attention to, the stocks that drop 10% or 15%. It ain't JPM, because if JPM's down 10%, the market's in some trouble. So that's what I wanted people to understand. So it's like, you now know, okay, when the market's running, it's pushing. And you can understand, and it's pushing, right? What's your thoughts in Nebus's partnership? think it's a good partnership for Nebus. It gives them an opportunity to show what they're capable of. Working with a company, anytime you can work with a company like Meta, puts you in a different ballpark. So I like the rebrand from Yandex. I know some people keep hearing me say Yandex, but that's the original Nebus. That's what Nebus has revitalized themselves, renamed themselves. So yeah, I think they're in a great spot. I think that's a good partnership, really good partnership. My question technically never got answered. Would you hold or just take on quantum? This isn't financial advice, but I'd like to hear your input. I thought I answered it, but let me just answer it again for you. Quantum computing, to me, is going to fall 50%. That's space in general. So your QBTSs, your IONQs, all of your quantum stocks, to me, they are going to fall 50% at minimum. So as far as leap options, that's just my thoughts. I would not be a buyer of quantum computing names unless they fall 50 to 70% from here. I've seen too many times. So those are my thoughts on that. No problem. All right. Any last questions from anybody? Any last questions? Yep. Any last questions? No problem. Okay, hello, took a hit. Financials. Yep. No more tickers. So where can today's recording be found? So once this we'll go ahead, once this recording is done, we'll go ahead and have this for you. It'll be right here in this tab. So as soon as it comes to my email, I'll make sure I drop the recording. So yep, it'll be right there, Menti only. Yep. Any last questions? Questions. Speak now, forever hold your peace. We will be live again and again and again every single time we can. So if I feel as if there's something to cover, we'll go live and we'll cover it. So hopefully everybody got the information that they needed for today. And we appreciate everybody for their time. We're going to just be in the office a little bit later tonight. So I'll be working on a few things, but I'll keep our eyes on the futures. But yeah, market said high and just, pretty much range bound. Watch Oracle below that 225. Pre-market notes will be out by the time you wake up tomorrow. So you should have your pre-market notes. We'll see what happens. It goes on. But that's pretty much that. So I appreciate everybody for their time. Thank you very much. And appreciate you guys being on here. So yeah. We watched the SPY, NASDAQ, QQQ. I was going to say we watched the SPY, NASDAQ, and DIA, YM, right? NQ, and the ES for the futures. So, yep, tongue twister a little bit there. So that's why I pay attention to it during the evening. So, yeah, really good day today. Shout out to everybody that was able to make it on here. At this was time being on here, we appreciate you coming in and joining us. And we look forward to having you join us here in the future. This is what education looks like. Win, lose, draw. We show up every single week to be able to deliver value, right? We don't hide behind nothing. We're ready to work, but it's a two-way street. You got to be ready to work to be able to deliver, right? So we take this very seriously, and this is why we are going to continue to show up each and every time, right? Because we're not just in this for the short run. Some people are just here for a good time. That's not what we're here for. We're here for a long time. So don't be the person that's so focused on what can I do this week? What can I do today? Let's slow that down. Let's focus on what you can do over a period of time. It will be a-okay. You'll get to where you're trying to get to over a period of time. Don't feel like you got to rush. And that's mistakes that a lot of times people is making, is thinking, I got to rush and get it done all today. Nah, just sit tight. Let's get through it one step at a time, one day at a time. Let's get to it. So stay focused, stay locked in. You're right on time. You're in the right area. You're in the right room. So if someone invited you to this room, tell them, send them a text message after this call. Yo, I appreciate you for letting me know L was going to be on this call today. Right. So not just don't use information and have information overload either. So don't be sitting on the sidelines too long that you never get into the game. And now your brain is just filled with a ton of information that you don't really actually know how to use. So that's really my thoughts. Appreciate y'all for your time tonight. And I'll go ahead and close this thing up. Appreciate you guys. Peace.